Reserve rights, or the RSR token, is on a massive run. It's climbing from one high to the next. The question is, what's fueling all of this? Reserve rights is definitely riding the real world asset narrative. A lot of real world asset tokens are currently going up, but who's buying here? Who's selling here? Let's have a look at the data most people are not considering. Today we are up by 36%. This week we more than doubled. This month we almost tripled. But have a look at the very long term. At one point we were at 10 cents. Now we are at 1/10 of that. The recent rally is just a blip in the long term. Now, why did the price crash that much? This here is partially the answer. This is the market cap, not the price. So the market cap is almost at half of the all-time high. The price, of course, isn't. And the reason for that is token inflation. There are now way more RSR tokens floating compared to 3 years ago. Now you can already tell from the beginning of this video that I'm not just selling you the marketing jazz on the website. We want to know the data most people aren't considering, the data that actually drives demand versus supply. Let's have a look at supply. There were a few funding rounds, 3 million in 2019, 2 million in 2018, an ICO of 360K, etc. Have a look. The people that participated in those funding rounds had very nice ROIs. But again, let's have a look at the delta between the market cap and the price. What we've got over here is the circulating supply chart by Messari.io. And there is a slight inaccuracy here. There was never 100 billion circulating. We pretty much started at 3.7 billion and then more than 10x'd in the supply. Now we are at 50 billion. The maximum is 100 billion. Here's the same chart directly by looking at the blockchain, so I can confirm. We can check out those minting events over time, and we are currently at those 50 billion. So let's have a look at the details in the documentation. Reserve rights, RSR has a fixed total supply of 100 billion tokens, 50.6 billion are in circulation, 49.4 billion belong to slow and slower wallets. So slow wallet is controlled by the project team. The slower wallet is also in the hands of affiliated projects. So half of the supply pretty much gets released over time in a slow manner or in a slower manner to the people that contribute to the ecosystem. Now, is that good? Is that bad? I'm not sure. Usually you've got way more circulating supply after a project has been around for such a long time. There is token inflation to come. And if demand doesn't grow as quickly as the supply, then of course the price has to come down. So the people that currently work on the project have to create enough demand. Now here's one reason why reserve rights is going up. It's the real world asset narrative. Real world assets increased by almost 70% in the last 7 days. Only AI agents and cat themed coins could outperform this. All the other categories did worse. And the good thing about Reserve is that it's still active. Look at the GitHub repository. This is the place where programmers develop and submit their code changes. And there had been an update just 4 hours ago, another one 5 hours, 6 hours ago, yesterday, etc. So there is real programming activity happening. Let's have a look at DeFi Llama. This is the place where we can see how much capital is locked up in various decentralized finance protocols. And the total value locked for Reserve is at all-time highs. It's currently at roughly 50 million. The market cap is roughly at 10 times the size. So 500 million market cap in an ecosystem where the largest player is at 1.3 billion. So this can give us a hint how much potential upside there might be. If reserve rights was to make another 3x from here, a 3x in outperformance, not just in US dollars, then it would be the largest real world asset token in all of crypto. Now let's have a look at who's buying and who's selling here. Let's look at the on-chain data. I created a tool that distinguishes retail wallets from the whale wallets. On the left side, we've got the number of wallets that hold at least 100,000 RSR tokens. At the current price, that's roughly $1,000. That's what I'd consider retail. In the middle, we've got medium-sized retail. That's now a minimum holding of $10,000. On the right side, we've got the whales. That's a minimum holding of $100,000. So we go a 10x from each of those charts. Those are very long-term charts. They start in January of 2022. There is long-term accumulation across the board. The whales aren't buying that much anymore in the last 2 years. Now again, compare this. This is the number of investors, while this is the price development. All of that down movement is an expanding token supply. It's the team getting money out of the system. It's not the investors that have left the asset. Now what happened in the last month where the price went up by a 3x? Here are the same kind of charts with the exact same thresholds, but only for the last 30 days. The number of retail investors grew by roughly 6%. Medium-sized retail grew marginally, less than 1%, and the number of whales declined slightly. So this rally cannot be 100% explained by just retail demand, right? Why would the price 3x when the number of investors isn't growing that much? But let's have a look at relative long-term performance. If we invest in an altcoin, we want to see outperformance over Bitcoin and Ethereum, right? Otherwise, you can simply just buy Bitcoin, ride the crypto waves. Why get into so much risk of a small altcoin if we don't see outperformance? And so let's have a look at this chart. This shows RSR relative to Ethereum. So it's not the US dollar price, it's the Ethereum denominated price. Unfortunately, this was a very long-term, very constant underperformance of 98%. But recently we are seeing the rally, so the underperformance now is only 95. If we just look at that rally, then the outperformance is a bit over 200%. Now here's something I don't like about RSR. Have a look at this. This is still 50% of the entire supply in a single wallet. This is what goes to the team at some point, or at least to associated projects. Then we've got the reserve, and we've got also Binance here, Binance there. Another Binance wallet over here, an OKX wallet over here, a Qcoin wallet over here. But it's basically Binance that owns most of the liquid supply. And that's then also what we can see in the trading volume. 40% of the spot trading volume in the last 24 hours happened on Binance. The value of 140% of the market cap got traded on the perpetual futures, so on the bets, again on Binance. So Binance, or at least the whales on Binance, have a massive price impact here, and this unfortunately makes a lot of blockchain analytics very hard, because centralized exchanges are black boxes. They don't show us the number of whales or the number of retail investors. Can this rally last longer? Yes, of course it can. But if you ask me, I personally prefer tokens where I can see the data, where I can actually see if there is long-term adoption by people, where I can be 100% safe that that is not just manipulation by one or two players. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. If you've got Telegram, feel free to join us. Link is down below.